The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, and probably not said any better than this.
This is Houston. Say again, please.
Houston, we have a problem.
And certainly do. We went to a low of 1820 so far today, off currently 48 points on the S&P cash at 1829.35. Yeah, 1826. It's bouncing around a little bit. But I can't help but see a move like this and start looking for 10-cent options, call options out of the money. And actually added a couple of positions in the newsletter on the last move down to 1820. And we'll see. But I think that there's probably a 50-50 chance we hit 1900 by Friday's close on the S&P cash. And at that point, maybe we come back down. But I have a feeling we're going to rip some faces off with a big move. And if I can spend a dime or two to make $4 or $5, I'm more than willing and able to do that. And you have to kind of take a chance down here to make a lot of cash. But my guess is everybody and their dog just went short. And the margin callers just got wiped out today. And now the decks are clear. We're probably going to have a nice little bounce out of here. I think it's also after this is done, or when this is done, I think we're going to have an issue to really have a big downturn before the end of the year. I'm not expecting a lot of huge upside, but like I said, I have a feeling we're probably going to see a little bit of a recovery, some sideways action, volatility drop again, shorts get squeezed into the end of the year, and then probably have something like we saw in 2000 where everybody comes back in and starts selling left and right January 3rd. At least that's my setup right now. There are a few reasons why. We're going to get into them during this action-packed show. And what else do we have going on there? Of course, now we're at 1832. Like I said, if you wanted to play out-of-the-money calls, there is no better time to do it. I was buying as many as I could in the first 10 or 15 minutes of the day. Much like Coronado burning his ships after he got to Mexico. He says you're going to go in there, you're going to get all the gold, you're going to get it ready, and I've already burned the ships, so you're stuck here, you might as well do it. And kind of the attitude that you really need to have out here. I'm going to sit on these. If I hit 1900, 1905, that's where I'm going to be pulling the trigger on these options and getting rid of them if they are in the money. But I have a feeling most of them will do fairly well. We're already back up to 1840, and I'm going to tell you why I liked it, but I already told you. If you tuned in to the Tom O'Brien show on Friday evening or listened to the show, I think we had a caller call in about, what was it, Wednesday or Thursday last week? Maybe I need to go find it. And we were talking about the IWM. I talked about it again on Tom's show and brought it up at full length because I wanted to make sure that people didn't listen to my show, did listen to this. And that is how well confluence zones work when they're used over time, long time, and at the same time, the move between the 382 and the 618 is ultra narrow. So we had that. We had to do about a 2-year chart on the IWM to set it all up. But confluence came in at 104.20 to 103.84. And what did we hit for a low here on IWM today? 103.55. That's when I started saying that it was time to load the boat up with out-of-the-money calls today for Friday's expiration. And, of course, if you bought this morning, you got a fairly good deal. Even if you bought in the last hour, you got a fairly good deal. Now the risk is probably fairly high, and you probably missed it just a bit. Anyway. What else do we have going on out here? That was one of the charts. There's another one that you want to be looking at, the IWM also. And that was that you had a beautiful butterfly out here. Oh, such a beautiful butterfly. Now, too much energy on the way down out here, but on the IWM. But what you do have is a target of 103.76. This thing was set up. It was gorgeous, and it was beautiful, and I bought it with options, of course. There's no better way to reduce your risk than options. And, again, you don't want to be betting the farm. I told everybody to pull back a little bit in my newsletter when we did start buying options. But, like I said, I bought a bunch of 10 and 25 cent options throughout the day, including into the last hour. And we continue to buy some bigger positions based on what I think the IWM is telling me, which is this market has temporarily, pretty much temporarily hit lows. And we could get a nice 2 or 3 day bounce out of this thing. I'm looking for 1900.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I'm still apologizing to everybody I can find for having to listen to the music pre-show and getting ear raped by the very bad disco music out here. I apologize once again. As I told the engineer who played it, disco is the Ebola of music. And I might rather have Ebola than have to listen one more time to horrible disco music. But I guess there's no convincing somebody that is incredibly insane. And what else did I say? Oh, disco is in the septic tank of music history. Oh, boy. Just, Bataan Death March, horrible things, floods, famine, and disco. Just horrible things. Anyway, looking at Thursday, tomorrow, after the bell, we've got Google, Capital One, I think it's before the bell, SanDisk after the bell, and I put the symbol twice. I don't know why I keep doing that. Probably because I copy and paste it. But we're going to have continued earnings. Not a big one on Friday. I think there's one. Now, Monday when we come back, we do have Apple, and Apple has been extremely active today. It finally cracked out here, so we're going to be watching that. But I suspect Apple is going to go through earnings and be back up at $100. Come Monday, I'm just not expecting a huge move. Go ahead. We've got We've got Rob from Paramus, New Jersey.
Hey, David. How you doing?
Good.
Hey, it's a great show. I had a question. I just turned on your show, and not sure I heard, but did you say if the S&P 500 goes to 1905, it's another good opportunity to short, or you're saying wait till after January?
I'm going to tell you that you'll probably be able to short individual stocks, but my guess is that at that level, there's going to be, basically 15 points up, 15 points down, 15 points up, 15. This is going to be choppy as all get out. This is one of the few times where we had almost a straight line move down. And there's the rule of alternation. Have you heard me talk about that before?
Actually, no.
Okay. Even some of the people that are incredibly wrong in the stock market do have some fairly good ideas. And one of them comes from, what's the guy's name? Prechter. And basically he has a system that's unfollowable. But he did come up with one kind of interesting idea, and he calls it the rule of alternation. And that is if you have a wonderful move that's almost a straight line on a chart, that the next move out of there is going to be a complex move. It's going to be choppy. It's going to be violent. If you have a violent move, then normally after you get that, you get a straight line move or a straighter line move, right? So that you're going to have kind of for most of the time, alternating between the choppiness and a true trend. You follow me?
Yeah.
Okay.
So it went down so hard, you're probably going to chop.
Yeah, but it went down so almost like a ruler. You just drew a line, right?
Yeah.
So when you see those, normally what you get is a violent reaction to the other side. Okay, and it happens, and it's quick, and it's over in a few days, and then that's it. And then the market doesn't know what to do. As they say, it doesn't know whether to wind its watch or spit. And I suspect we're going to get into November. We're going to start seeing the effects of lower gas prices in retail, and everybody's going to flood over there for a few months. Meanwhile, a lot of the big hedge funds are going to be upgrading everything in the world, talking it all up, and this is where they're really going to go into distribution over time. And kind of what we saw in 1999, where everybody was waiting for the first day of the new year to sell because of the way, I think it went from, 28% to 15 or 18%, 15% for long-term rates on sales, on your taxable sales, and everybody was waiting for the first of the year. I suspect that we're probably waiting for a lot of these guys to start distributing over the next couple of months, and then wholesale selling after the first of the year. At least that's what my long-term belief is at the moment. Of course, that could change in a minute, but I'm thinking we get up in that area, we kind of meander around for a while, we get closer to Thanksgiving. The numbers aren't so bad from retail because people now are spending, $20 less at the pump each day, and they're going to spend that, especially at the low end of the market and economic scale. They're going to be spending that. Retail's going to look a little bit better. Everybody will move over into those stocks for a little while, and then the next big move probably happens after Christmas. So if you want to hang on, we'll talk more about it. What's that?
Thank you very much.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off 37 points on the S&P cash at 1840.38 as we speak with 4 billion shares. And I did want to talk one more pattern that I don't have enough time normally to bring up because it just doesn't present itself. But as we look at the IWM, if I had a nice paint program, I'd put something in it. But it is a pattern I learned from a gentleman whose name is Bob Carver. He maybe still have his website out there. He always had interesting charts. It was kind of interesting. I think I quit looking at his website maybe 5 years ago. The one thing I really picked up that I liked was a thing that he called a poly trend top. And this is probably an extreme example of it, but the other reasons that I was looking at thinking we'd get a turnaround here. And the idea is this one's a little tougher, probably because the move. If I zoom out, it'll probably look a little bit better. But if we go to this gap that we just tested here today, that gap occurred on November 10th of 2013. And we're back into it today. But that gap occurred on 53 million shares. We already have 70 some odd million today, don't we? And 64. So we've got what will be what's called a polytrend top. And the idea is if you drew something the equivalent of a contact lens over the top of it, you'd have a pretty good idea of what a polytrend top should look like. Now this one kind of went a little bit stronger out here on the left-hand side. But if you just think about putting a dome on it, I don't want to bring up Polyshore's Biodome, in case anybody ever saw that. Still has flashbacks from the 90 and bad Polyshore movies that they were forced to watch on airliners like me. But, you know, I hope we never meet in person because I may be prone to try to go after him for inflicting that kind of emotional damage on me. Biodome, what a horrible movie. Anyway, think about just putting a dome over the entire top of it. But it is not uncommon to see these moves. Now, the question is, where do you think the IWM could actually bounce? And normally you want to look at something like the first 382 bounce on that. That would take you to basically 109 on the IWM, and what I'm looking for is just a move back to these huge railroad track down days of the 9th. And what was the high of that day? 108.90. You also have 108.99 for the 382 retracement. Could it get as high as 50%? It could, mostly because I suspect that everybody and his dog, once this thing got below about 110, probably piled on short. And that means there's a lot of people out there. And I spoke a little bit about it yesterday. That is that the worst thing that you have being short, especially in a market like this, is everybody and their dog decides that they want to go short, but it's late in the game. And what you get is a lot of people on the wrong side of a trade and wicked bounces in these highly short markets. And most people do not have the ability to sit through them. It took me years of sitting through these to figure out, if I should be, and could I mentally hang on through the wicked bounces that bear markets have. And I figured out for the most part, just not worth when they move, kind of like this one, straight from 117.80 up there at the high to 103.54 today. If you're pretty sure that you've got a good situation, just go ahead, cash out, and look for the wild moves. And that's why I'm saying on these moves, I would not ever buy these moves with an equity. But if you can find pennies on the dollar options out of the money and get back into them fairly easily, I think a lot of the stocks that are in the IWM that I bought calls on, once I start getting into about 106 on the IWM, I'll start making some fairly decent money. And like I said, I'm looking at this to probably rally up to that 109 level and maybe as much as 110. So that's what I'm looking for in the next couple of days, just a wild short covering rally. And again, be very careful about trying to reshort these. It's going to take, there's as many stupid people that were long margin will be margin short now. They did the same. Basically, people that treat the market like a gambling casino can't help but go full margin. And I think the reason that we had this huge move down, and it was almost linear, was because of margin players. I think those some people that were long margin were now short on margin, and those guys are going to get creamed both ways. It just seems like the weakest hands in any market, bear or bull, are always shorts. So just be wary of all the other people that talk about it. That's why I was going to say maybe don't get so excited about just reshorting this thing at 109, at 1905. Maybe it goes sideways for a little bit before it burns off that energy. So like I said, just don't get too excited about it. We've got earnings on Monday with Apple, and some of the other ones we'll go through, but just don't get in too much of a hurry. When you have these big moves, it takes a little while. It just doesn't turn right around, and normally too many people are shorting that 1905, and every time it goes down 5 points, they're covering it, and it becomes problematic. Just remember that the market's probably going down historically about 25% of the time. About 75% of the time it's going up or a little up. Doesn't have to go much up. But it's pretty easy to see these things burn out. And with the move in the VIX, another good indication that after the big move, it's going to go sideways for a while. And there may not be a lot of money to be made either way. I'll be looking at selling spreads once we get up into that 1900 area. And with the VIX probably going to be holding up fairly high, probably fairly decent time to be selling option spreads in the marketplace. You'll have your downside limited, and my guess is you're going to have a lot of decay in those options rather quickly, and maybe a good way to make money until the end of the year. There's going to be exceptions, especially individual stocks. But keep an eye on it. Anyway, enough about the Russell. We're going to try to get into some of these other issues that we can see. We talked about Apple. It finally cracked today. But again, it's so close to earnings. We'll have to see just exactly what happens. We got our first day. Volume did pick up a little. It didn't pick up enough. I mean, you had the hard down day. After 103.74 the day after September 2nd. I guess that's what, September 3rd? Is it? Yeah, it wasn't on a weekend. And you came down on heavy volume. That was 125 million shares that day. Today, 73 million shares so far. So maybe we end up with 100 million shares. But again, we're not going to be breaking any of those lows out. We had 189 million shares on the spike down on 9/9. We're into that today too. So I could see this thing come back up to $100, maybe even go out. Apple go out at 100 come January 31st. And my guess is then we're probably going to start seeing some selling. So just keep an eye on some of these. I think that you have topped out. I'm not worried about the upside. I am worried about them going sideways and boring us out. And, of course, again, so many shorts climbing on this market, we're going to have some higher volatility. But especially when we get into about December 10th, we're going to see a lot of these short positions have to be covered as they go out to the end of the year. And my guess is that we're probably going to have a fairly decent December 10th to the end of the year as short positions, which are going to probably be way too high, get slowly squozen out. If you want to pull the trigger late in the year, let's say after December 1st, you're almost always better waiting till the 3rd of January. Not only do you not have to worry about wash sales with the IRS, but statistically it's a horrible bet to be short into December. Oh, cool. I don't know if it's in the Russell. I'm going to get into that. Maybe if I can get into the break, I can answer that question. Anyway, what else do we have? Okay, 1842.84. COF. Capital One, let's take a quick look at it. I mean, these things are in higher trading ranges. We also saw Bank of America out, I think, this morning. But I did want to bring up confluence areas and longer confluence areas that you can set up. And you're going to want to be watching these long term, especially in the financials. The financials probably, they came close today, but they didn't break like on COF. Got down here, the volume is bigger. That means that we're going to get these things tested. Doesn't mean they have to be tested before the end of this year. But what I am going to show you is that the confluence level on Capital One has a beautiful confluence level at about $72. And my guess is that as some of these stocks roll over at the first of the year, you're going to be wanting to watch these 72 levels unless, maybe Ebola does take off and everybody is looking at the end of the world. But my guess is it probably does not. Some of these are probably not as good as others. And of course, we saw Bank of America out with earnings today, kind of disappointed. Certainly did not blow off. It came down on higher volume. These things are going to be working themselves back down to the lows. In the case of BAC, it had a beautiful Gartley pattern. And while you had a little spike out of that, I think you had everything that you were looking for in a Gartley pattern on Bank of America, and you've gotten pretty much everything you're going to get out of this. Remember, these stocks like Bank of America and American Express are all 90% institutionally owned, and these guys are going to juice these things up. But that's why I'm going to say I'm not expecting these things to break out, but watch for them to continually upgrade, say that you've got your pullback, now is time to get in, and they're going to be distributing these things as best as they can throughout the end of the year. But a great, I think we showed this on Friday, didn't we? I think so, on Bank of America. It certainly was one of the better Gartley patterns out here. And I really like the fact that the energy from this last August 1st low up to this high on October 6th was on less energy than the X to A leg that we saw back stop when the A point came in on May 16th. The X point was up here on March 21st. So some of these patterns are really starting to pay off now that we've had a market that's kind of gotten out of the chop range. Let's see what else we have. Some of these others out here are actually making some Gartley patterns. We may have seen some lows, or at least short-term lows, in some of these stocks like Akamai. I don't like the fact that it didn't have much of a retrace out here. The C point on October 6th was only a 40% retrace, but we did come back down. Volume really hasn't increased in Akamai out here, so we do have a few more of those. Let's see what else we have. Wanted to see a few of these out here that I was looking at. Blue, BMX, BNN, BZH. I wanted to see how this one reacted today. And, we had these huge hammer downs in housing. And believe it or not, some of the only stocks that are up today certainly are stocks like Beezer. This thing actually had a little juice out here today, but you're doing exactly what you should have done, which is look at this low on July 31st. That came in with 2.6 million shares. That was the hammer down. We got into it with 800,000 shares on October 13th. Pretty good indication that you wanted to get out of it. I had a question about what I was buying this morning, and some of them in the Russell. I don't know if this is in the Russell or not. I thought it was, so I bought it anyway. But one of the stocks that I bought this morning, or calls on, was Stratasys. I already got in and out of it this morning, but the thing was got down to like 108.5 or something, and went up to 113. But I was buying that in the first 10 minutes, but already got out of it. When you see cash in any of these option positions, go ahead and take it. But of course, we were short this thing at 130 all the way down to about 108 or 109, 108. We had puts on it. We took the money on the puts, and this thing kind of bounced. But one thing I noticed was, again, these are the stocks that are probably going to bounce the most. In this case, SSYS had a huge gap up on the 7th of July with a little over 8 million shares. We got into it with 1.5 million shares, and that's why I bailed out of it on the short side. But also why I decided to buy puts on it first thing this morning, and got out of them when the thing went to 113. I think it went all the way to 114. But there's a few more out here to watch. But watch for these stocks with huge volume gaps that are being tested on light volume. That's what you want to do.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, I get some email. Of course, you can always call me at 877-927-6648. And see what else we have. I don't even understand this question. Would sell a CCS on UXVY about $55 for this week or next? I don't know what they're asking. But I've gotten some other email, and I have this to say about it.
I find your lack of faith disturbing.
Yes, I do. Get on board the train. We're only off 29 points right now, folks. So just get used to high volatility in a bear market. And bear markets don't go down all the time. It's kind of like one of those elevators where you're in it and it kind of like, boom, you drop a foot and your heart's in your chest or your stomach's in your heart. And boom, it comes down again. But my guess is that we probably close out somewhere around like 1865 or something today, 1870, and maybe see a bounce tomorrow and into Wednesday and on to Friday, some better numbers and stuff. And we just kind of meander, and 50 points is nothing after what we've seen, a 170-point move, 160-point move down. But again, I think this is, for option players, a gift of the short-term variety. Now, I think that my my idea that this closes at 1900 has about a 50-50 chance of coming true. So I need to have options that certainly pay off 300, 400, 500% between now and then. That's why I can say that I don't like playing in the money options at this point, because all your premium's just going to melt away, and you're probably not going to make that much, even if you're right. But I digress. I wanted to look at a few of these gold plays out here. Yamana, which I know everybody's been hot on this one for a while. It's hard for me to see a world where the miners do well with Ebola. I know a lot of people that were talking this up at one point in the day, and I can't remember who it was. But I was on the opposite side of this trade with the JDST for a while. We got out of it way too early. I didn't see the perfect storm coming. I saw the charts, and the charts basically said to get out with a 30% profit. Not bad, but left some money on the table out here. The wild markets, if you get the lion's share of a trade, I think you should be happy. If your idea of trading is that you have to get the entire move, you're probably going to be an unhappy trader. But looking at some of these out here, especially longer term, if there's really anything out here so far, and at least in the minors, I think it's problematic. We may have seen the move in gold itself, but especially stocks like this, if I was looking for much higher gold prices soon, I would think that we'd probably see these things moving a great deal more than now. Let's see what else is out here. I wanted to see how CRM did. And, for the most part, even some of these smaller ones out here broke through previous lows, and the volume is at least the same already today. Going to be a little higher, which means we're going to come back down there and test these. But there are enough of these out here that I think we're going to see a decent bounce. So that July 17th low in Salesforce with a 4.8 million shares has already got 4.6 million shares today. So we're probably going to exceed that, but close back in the trading range, which means we're probably going to be in a lower trading range, maybe up to 55 in this or something, maybe 56. But just keep an eye on it. Watch this market. Zoom, zoom, zoom. Short squeeze, baby. See you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to. Cover when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.